Hi, Blended Accounting 1. Today we're going to go over adjusting entries. Adjusting entries are completed at the end of an accounting period. An accounting period could be a calendar year or a fiscal year. A calendar year is January 1st through December 31st. A fiscal year can be any other time period that the company would like to close the books. So, if this particular company closes on June 30th, well, then that's a fiscal year. Another company could close on August 31st. That's a fiscal year. So one more time, adjusting entries are completed at the end of the period. So if you could go to Blackboard and print out this form and work with me as I go through this video. Okay, again, you don't get accounting until you do it. Okay, also before we begin, you have to know the normal debit and credit. Okay, so if you don't know debit and credit, you're not going to be able to do this. So the first entries that will be similar to the lab, you are going to do the adjusting entry first, and then you're going to post and you will figure the final balance. So I'm going to show you how to do that. All right, so we read the first transaction. Here's what it says. On June 1st, Kariba Landscaping Service prepaid $10,500 for 8 months rent. Give the adjusting entry to record rent expense at June 30th. Include the date of the entry and its explanation. Then post all the amounts to the two accounts involved and show their balances at June 30th. Kariba adjusts the accounts only at June 30th, the end of its fiscal year. So what does that mean? This company closes their books on June 30th. This transaction happened on June 1st. Well, what does that mean? Only 1 month has gone by. All adjusting entries will be different, but this particular entry, only 1 month has gone by. Okay, so I look at the total time period. The total time period was 8 months. Okay, so you grab your calculator and you take 10,500 times 1/8. Okay, you multiply that out, 10,500 times 1 divided by 8 equals 1,312.50. That is what we will adjust the account. So some of the prepaid rent has now been used. The tenants have maybe lived there for a month. Okay, so I'm going to go to the board and I'm going to show you the adjusting entry. I'm going to debit, we're going to credit. Okay, the date of this adjusting entry. One more time, they are only asking for the adjusting entry. They're not asking for the original transaction. Let me just tell you what the original transaction would have been. Well, I'm hoping you know this as well. So on June 1st, they prepaid rent. They debited prepaid rent and they credited cash. Now, at the end of the month, you're adjusting for 1 month of that rent that has now been used. So you figure that out and you're going to debit rent expense. For 1,312.50. Let me erase the credit a little bit. Move this over more. Okay, and then you're going to credit, indent a little bit, prepaid rent. 1,312.50. I showed you how to get that. Also, the date at this time will be June 30th. Now I'm making it different from the lab just to give you more experience with adjusting entries. So June 30th is the end of the period. You're going to adjust the accounts. Let's see if this makes sense. Okay, rent expense is increasing. Yes, I've lived there, so I'm going to reduce my prepaid rent. I credit prepaid rent. I'm reducing that. What is prepaid rent classified as? That's right, it's an asset. So we're reducing that. Put in explanation, and then you put incurred rent expense, or whatever it asked you to do in the lab. Okay? All right, now I'm going to erase. Okay, and I'm going to show you how to post. All right, so we're going to post these accounts. All right, so I'm going to post prepaid rent, and I'm going to put another account for rent expense. The left-hand side of this account is always the debit. The right is always the credit. Right over here, and then I go over here. Okay, so what I'm about to teach you is how to post. What I'm showing you is a T account. Looks just like the capital letter T. On the top of the account, on the top of the T is the name of the account. The left is the debit, the right is the credit. For prepaid rent, you will always have your normal balance. Well, what's the normal balance for prepaid rent? Because it's an asset, a debit. So let's put balance right here. Same thing for rent expense. You will have the normal balance, which is a debit. Let's put the balance right here. Okay, so now we're going to post the first entries. All right, so on June 1st, we have to post that entry. June 1st, they prepaid $10,500. I went through that entry. One more time, they would have debited prepaid rent, credited cash. So I put over here, June 1st is the date, $10,500. Okay. All right, now I'm going to look at my adjusting entry. This was made on June 30th. I'm going to post that. Kind of check it off as you work. So then I put June 30th. Be careful of the dates. The lab will mark you wrong if you put the wrong date. So put at the end of the month. And then I put 1,312.50. Okay? All right, so now I take 10,500 and I subtract out 1,312.50 with your calculator. And I subtract out, let me check it again, 10,500 minus 1,312.50, and that gives me 9,187.50. So my balance in the prepaid account is 9,187.50. I'm going to go over now and I'm going to post the rent expense. I look at rent expense and I put June 30th is the date. And then the debit is 1,312.50. Okay? Well, rent expense is only one post, so my final balance is the normal balance for an expense, which is a debit, 1,312.50. That's the first transaction. Be careful in the lab. Make sure you post beneath that last box and post on the normal balance side. Okay? All right, so now I'm going to erase. I'm going to keep these. And I'm going to erase the top. Erase. I'm going to keep the debit and credit. I wish I did on the other side, but I didn't. Trying to save time for you. All right, so then I've got debit credit, and here's my balance. And here's my balance. Okay? All right, now I'm erasing. And I'm going to do the next adjusting entry. Okay, this one's going to kind of be different. All right, so let me go over here. Let me erase this. This one's going to be different. Okay, this one, it says on June 1st, Kariba Landscaping Business paid $2,400 for supplies. At June 30th, Kariba has $800 of supplies on hand. What does that mean? $800 of supplies on hand, that's what's still left. So they started the period with $2,400 of supplies. Well, here's my T account. I put supplies. Supplies is an asset. Okay, the normal balance is a debit. To decrease it, you're going to credit. Well, if I began the month with supplies, that means I had a debit balance of $2,400. So I put in $2,400. Then it says at June 30th, Kariba has 800 supplies on hand. Well, this is the balance is 800 is still left. So I'm going to do an adjusting entry. Well, how do I figure that out? I'm going to take 2,400 and I'm going to subtract 800. 2,400 in your calculator, subtract 800. That gives you 1,600. 1,600 of these supplies was used. Whatever you use, you will expense. Okay? All right, so let's go through the adjusting entries. This is June 30th. I'm going to put up here supplies, expense. Very important. Make sure it says supplies expense. Supplies is expense is an expense. So I debit that 1,600. Just want to be clear. Draw a line. 1,600. And then I'm going to credit. Look at right here. You get it. I'm going to credit supplies 1,600. And then I put the explanation. Supplies, expense. Okay? All right, so this is an example of posting. This would be June 30th for your date when you're working in the lab. This one is June 1st. Okay, these are two examples of an adjusting entry. Supplies expense affects the income statement. Why? Because it's an expense. Supplies affects the balance sheet because it's an asset. All right, I'm going to erase now. And now we're going to go do the big one. All right, so we erase up here, erase. All right, so let me read the next one. All right, we're still adjusting the accounts. However, we're adjusting for depreciation. What's depreciation? Depreciation is just like us. We purchase a car, we use the car, it goes down in value. That's depreciation. So businesses also have to depreciate their fixed assets. When you depreciate, for now, you will use straight line depreciation. Well, how do you do it? Straight line. You're going to take the cost of the asset, you'll minus the salvage value. Salvage value is what's still left after you depreciate the asset. And you'll divide that by the life of the asset. Life of the asset will be in years. Okay, so we look at this problem. The cost was $75,000. It says the equipment's value is expected to be 0. All right, salvage value is what the asset will still be worth at the end of its life. So in this particular problem, it's telling you this asset's not going to be worth anything. So that's 0. However, you still do it. So you take 75,000 minus 0. Then you look, how long is this asset lasting? It's lasting 5 years. Okay? So in your calculator, you're going to take 75,000 divided by 5, and that will give you 15,000. So the depreciation expense is going to be 15,000. You have to really do that first before you do this problem, just so that it will make it easier. All right, so now, what's it asking for? It's asking for you to make the entry for equipment, accumulated depreciation, and depreciation expense. All right, so let's do it in letters. So we have A. Let's make the journal entry for depreciation. So on January 1st, they purchased equipment. And it has a dollar sign. It says they paid 75,000. So we debit equipment, which is an asset. And this would be on January 1st. Okay? 75,000. Then we credit cash, 75,000. Cash is going down. We're already paid for the equipment. The depreciation will happen a year later. We're going to do an adjusting entry. When we do adjusting entries, you will learn the account that will never be affected is cash. So always look at your adjusting entries. Make sure they're not affecting cash or you did something wrong. Okay? Cash happens either before or after. All right, so let's go to B. Now we're going to make the entry for this 15,000 we figured out. And we're going to make that entry on December 31st. So we debit depreciation expense, equipment. So drop down in the window in the lab, pick that depreciation expense equipment, and we debit that 15,000. And then we indent and we're going to credit accumulated depreciation equipment. And that will also be 15,000. Okay, let me talk to you about these accounts because here's a new account. Depreciation expense, you already know. That's an expense. The normal balance is a debit. Here's the new one. Accumulated depreciation equipment. That's a contra asset. Okay, so contra asset. What's the normal balance? Well, you know the normal balance of an asset is a debit. So a contra asset is always the opposite. Normal balance is going to be a credit. All right, so accumulated depreciation will still appear on your income statement. However, it will subtract from the asset. So now we're going to post our entries. We're going to post. So post the accounts and show their balances as of December 31st. I'm going to erase. This is a long one. Let me erase this too because I might need over here. All right, I'm going to post. So I have to set up the T accounts. Here's the T account. I have equipment. I have accumulated depreciation equipment. Remember, that's a contra asset. Accumulated depreciation equipment. Hope I spelled right. Nothing worse on video, but I'm not perfect. All right, so then we have depreciation expense, and then this is equipment. All right, we're going to work on each T account separately. Let's work with equipment first. I've got debit on the left, credit on the right. The normal balance is what? Good. It's a debit because it's an asset. So I got a big B here. All right, so I go over here and I have January 1st is the date. And then it's 50,000. Nope, sorry. It's 75,000. That's what we paid. 75,000. And then, did I touch the equipment with any of my adjusting entries? No. So be careful. Don't touch the equipment account. We affect the accumulated depreciation. So my final balance is 75,000 because I didn't affect it other than that first journal entry. Okay, now I go to accumulated depreciation. When is the first time I touched accumulated depreciation? On December 31st. So I put in December 31st. Be careful with the lab. Make sure you put the proper date or it will mark you wrong. 15,000. Okay, what's the normal balance of accumulated depreciation? A credit. It's a contra asset. So I'm going to finish this and I put my balance. Okay, and that's December 31st and that is 15,000. Okay, now I go over to depreciation expense. When is the first time I hit depreciation expense? On December 31st. So I put in December 31st, 15,000. Did I touch it any other time? No. So in this particular case, there's only one entry and I've got my big balance and that's December 31st, 15,000. So my final balances after I post, depreciation expense has 15,000, accumulated depreciation has 15,000, and my equipment has 75,000. Okay? All right, the next part of the question, it's going to ask you, what is the equipment's book value at December 31st? So I'm going to erase. And let's set it up. Okay? So when you work in the lab, you'll have the equipment account. Next, you'll have accumulated depreciation. And then you'll have, draw a line, that will be the book value. So for my problem that I made up, the equipment was 75,000. The accumulated depreciation was 15,000. Remember, this is a contra asset. It's going to be subtract always from the regular account. Draw a line. So to get book value is always cost minus accumulated depreciation. Remember that. Write that in your notes. Book value, one more time. Cost minus accumulated depreciation. So now we take 75,000. We subtract out 15, so the book value is 60. That's your final answer for the second part of that problem. You will see similar problems to this in the lab. Okay? All right, so get cracking at it. Adjusting entries are tough. I'm going to do more next week. That's enough for this week. I just want to introduce you to adjusting entries. And I also taught you how to post. Only a few accounts. I'm not going to have you post to 1 million accounts. Why not? Because you just push a button today. It's computerized, but I still want you to understand how to figure the final balance of an account. Okay? All right, great. Good luck in the lab.